Good morning, and thank you for tuning in to another edition of Pre-Market Pulsescan on the Vulcan Report. Today is Tuesday, February the 6th, 2018. We'll start off the video with a special request from one of our YouTube subscribers and Black Ops Trading subscribers. We have a chart of Chipotle. All right. As you can see here on the weekly chart, the market has been in a downtrend. We know this because price action, trend lines, momentum line are all trading below the Kumo cloud of death on the weekly chart, and prices have been trending lower. We had a corrective bounce off of the lows of $263 made back during the week of November the 13th. So the market has been in retracement mode ever since then. All right, and that's what's going on here. Having problems up here at the trend line resistance, this orange line here, which is around $352.15. So the market has been steadily coming off. You look at the daily chart, same thing. All right, same thing. Looking at your intraday charts, you can see here, this is the extended hours trading after the 4 p.m. Eastern Standard Time close yesterday. The market headed even lower. It got down to $296.25 after closing yesterday at $300.30. So that's what you see with the market settled off at. What do I think? I think that the market is going to battle it out right here. You've lost momentum. This will be the second week in a row if the market closes here. This will be the second week in a row of lost momentum. Market needs to close above $316.70 this week in order to put an end to the current downtrend. You have a downtrend channel that has formed since the market failed at the resistance on the week of January the 15th. You've been in a downtrend channel ever since. All right, you got a downtrend channel within a longer term downtrend. So the market's coming off. It could still bounce from here, but it's going to need to do so rather quickly. And like I said, it needs to close above $316.70 this week, or it's going to open up the potential for more downside next week. And the market could potentially revisit the lows of 263. So that's what it looks like right now on Chipotle. All right, let's take a look at the overnight markets. Bitcoin futures is down 425 points at 66.30, hit an overnight low of 58.80. Dow futures down 215 points at 23,727. At one point, the Dow was down over 800 points. It got down to 23,088. All right, so it has since rallied almost 700 points off the overnight lows, ladies and gentlemen. Talk about volatility. The NASDAQ 100 E-mini down 25.5 points to 64.03 3/4. It got as low as 62.60 1/4 and has rallied, trying to get up to 200-point rally off the lows. E-mini S&P 500 is down 11.5 points at 25.96 even. It got down to 25.29, folks. These are some horrendous volatility bounces off the lows, folks. Russell down 2.3 points at 14.57. It was as low as 14.15.10. So you rallied from 14.50.10 all the way up to 14.57. Tremendous volatility, tremendous profit taking, and also looks like some buying. Nat gas down 3 cents at 271. Gold is up $5.70 at 1342.20. It did get as high as 1349.30, and the low was 1338.70. Silver really struggling here to get above $17. Right now it's at $16.71, up 4 cents. The low was $16.68. The high was $16.95.5 in the overnight markets. Crude oil down 80 cents at $63.35. It hit a high of $63.97.5 and a low of $63.10. Your strong bond is at 147.01, up 1 and 11/30, up a full point 11/30. The high was 147.23, so we're down 23/30 off the high. The low was 145.28. Tremendous volatility. Beans up 5 3/4 points at 975.5. And the euro is off 52 pips at 123.80. Pound sterling down 112 at 139.11. And your Aussie is down 43 pips at 78.57. And the dollar gaining strength, it's up 29 pips at 89.85. It did get up to 89.86. So it's right there at the highest. The low was 89.37. Strong bouncing around this morning off of the lows. Let's take a look at some charts. We'll start off with the Bitcoin chart. Take a look here. This is the weekly chart. This market, since its inception, has fallen from 20,500 to 5,880. That is an incredible sell-off. This is a well-established downtrending bear market, folks. All right. No, you do not buy the dip. These are not dips. These are breakdowns. This is a trending market. This market is trending lower. What dip do you buy? You buy this one? No. You buy this one? No. 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 There's nothing to buy on this chart. There's nothing bullish on this chart. Learn to trade and learn to trade correctly. The time will come for you to buy. The time is not now. The time is to sit on the sidelines and wait for your time. Steadily down, folks. See, the novice, the rookie, the wannabe trader is the one who is fueling the flames of the inverse rally to the downside, okay? That's what they hope. That's what they want you to do. They want you to come in here and buy this up so that they can drive it down even further. Don't play the game. All right, that's the losing game. You wait for your opportunity to buy, and trust me, it will come. You will have your opportunity. Right now, it's just not there, folks. Patience. And for those of you who are holding long positions, if you bought anywhere higher than where we are now at 67.20, you're losing. It's just, there's no other way to say it. You're losing. What are you doing? You should have been out. Should have taken a small loss and moved on. For those of you that are long from much lower levels, you need to be assessing how much profit you're willing to give up. You didn't get out at 20,000. You didn't get out at 19 or 18 or even 15,000. You didn't even get out at 12 and 10,000. How much more profit are you willing to give up? And prayer and hope that this is the bottom and it's going to go back up. You don't know when and where the bottom's coming in. The market hasn't told you that yet. What are you doing? Let's look at the Dow chart. All right. All right, here's the Dow futures on the weekly chart. All you see here is profit taking. All you see here is a correction. What is a correction in a bull market? Profit taking. All right, quiz. What is a correction in a bear market? Answer, profit taking. Enough people taking profit the market starts to accelerate to the downside because you have more sellers than you have buyers. You can call it whatever you want. You can say, oh, it's panic selling. No, not really. But okay, if you want to believe that. No, this is the normalization of volatility. We have not had this happen before, where the market can be down and it's really not considered a big deal. The media really isn't blowing this up. They did back in the early 2000s, prior to 9/11. They would have been all over this. It would be all over the news feeds, front page on a newspaper, and that's all they're talking about. And they'll be trying to, you know, cheerlead the whole thing and try to, prop the market up per se. You don't see that really happening. You don't see it happening. They're not really concerned, folks. They're treating this like it's nothing. I remember when the Dow first had a crack. This was back in early 2000. The Dow dropped, I think it was 727 or 757 points, something like that, intraday. Man, it was all over the papers. Every paper, every paper. You're talking about every newspaper, every news magazine. The cover was about the Dow the next day. They talked about it on all the radio stations nonstop. It was talking about panic on Wall Street, comparing it to 1929, comparing it to 1987, and everybody was worried. I will never forget it. You couldn't get a hold of your broker on the telephone because, again, this is pre-internet. Couldn't get nobody on the phone. Couldn't get orders in. You just didn't know what to do. Talking about panic. It was panic. I'm here to tell you right now, it was panic. And you don't see that now. We have normalized. This is the normalization of AI acceptance. AI is in full control of the market. AI has brought the market down yesterday at one point almost 2,000 points. And no one even bats an eye. Like it's this lets you know how normalized chaos has become, to the point where when chaos is happening right in front of people, they're not even aware of it. They're oblivious. And that lets you know about the new generation of people that are here on the earth. It is as if we have a generation of young people who know nothing about the past. They know nothing about history. They don't understand how things used to be, so they can understand how abnormal the current reality is. It's almost as if we're living in the upside down. Right is wrong, wrong is right. Right is left, left is right. That's what we are. This is not normal. Look at these bars. Look at the range on the bars. 26,884 down to 25,410. Over 1,000 points lost in a week. This week is outdoing last week. 25,477 down to 23,088. Almost a 2,000 point loss in a week. And the week is not even over with yet, folks. This is just 1 day of trading. This is just 24 hours of trading. So it's safe to say we lost $2,000 in 24 hours. Think about it. Let that marinate just for a moment. The Dow has lost $2,000 in 24 hours. Back during 9/11, after they closed the markets, after they reopened the markets, the Dow fell about 1,200 points, but it took the entire week to do it. So between Monday and Friday, the Dow fell 1,200 points. and then quickly recovered and never looked back. And they were creating songs of patriotism. And all you heard around the mainstream media was it's unpatriotic to short the market. And so people felt guilty about shorting, so they stopped shorting and started buying. So they encouraged everyone to help the Fed out. PPT was in full effect. The Fed started buying, companies started buying, individuals started buying, everybody was buying, and that's what made the S&P have a V-shaped recovery. And it hit 932 as a low and rallied and like closed above 1,000 by the end of the day. I will never forget it. Well, you don't see that happening here. This is a controlled demolition. This is a 9/11 market. This is 9/11 market action, meaning it's a controlled demolition of the market. And it's only affecting the stock indexes. It's not a flash crash. A flash crash is where markets drop suddenly across the board. All the markets, every market, both correlated and non-correlated entities alike, crash at the same time. That's a flash crash. And then they recover it's just as quickly as they crashed. That's a flash crash. No, this is a systematic controlled demolition of the market. All right? Never been before done. You can't even compare this to 2008 because in 2008 that was a one big flash crash that lasted from September to through March. Okay, just panic selling in the market, and the volatility was off the chain. All right, that was different. That was real selling. This is systematically controlled. You can tell that AI is really controlled. This is like a real live test of the power of the AI to control different aspects of the market and do it smoothly. Really, I want to say this is flexing. This is AI flexing and showing its true power. All right? It's showing that it's smarter than the human being that created it, and that everything is under control and it can do whatever it wants to do. And like I said, this is all systematically in control. Look at the intraday charts if you don't believe me. This is controlled, folks. Look at this. Everything's in control. You don't see anything out of control. You don't see any parabolic volatility bars. A parabolic volatility bar is when you have a situation like this. Let's say this bar right here, or let's use this one. Let's say this bar right here, was like 1,000 points, and then you have something like this. This would be chaotic if that was the case. All right. Of course, it's not. I'm just using the shape in these two bars as an example. But you don't see that. You're seeing a controlled, systematic, smooth dropping of the market. Even these greens aren't real. There's no buying. It's showing you there was no buying in the market. There were like no bids at all. Just smooth, controlled staircase down. That's it. And then here, now you can see the selling stopped, and now profit taking along with a little bit of buying, and then here we are. This is a controlled demolition of the market for whatever reason, for whatever purpose. This is what this looks like. You didn't have this before, not at all. In 2008, you had this parabolic bar like this, followed by a green parabolic bar that was the same, length as the prior bar, and you have several of these back and forth. No, this is systematically. This is And it's moving just as slow. It's not moving super fast. It's just taking its time, and it's lingering. That's the other issue. The prices on the downside are lingering. Look at this. They're just chilling. They're hanging out. All right. In a normal market environment, you would have people wanting to come and buy these lows. Oh, the market fell too fast. It's time to buy this up. You don't see that. Once again, you see systematic selling with no buying. Systematic selling, and that's it. From here to here, let me explain to you what happened. This bar here represents about 5 a.m. So this is the pre-market, nighttime. Here's what happened. Nighttime hours, you had a rally, right? Then when you started getting closer to the day, to 9 o'clock, what happened was the market comes down and tests those lows. Here you are here. The low of this bar is 26,005. The low of this bar is 26,026. All right. So you test this systematic. All right. The signal goes off. The algorithms here and here are starting to communicate. They know what's coming. Don't fight the tape. All right. You got some profit taking in here, but you don't really have any buying. Just a little bit of profit taking. AI is starting to speak to each other. The other systems that are in the market that are working, the order types, sense what's about to happen. So here's what they do. All right, they're not buying. It's just a little bit of profit taking. The rally is sold here. Profits are taken quickly, and this is what happens. This bar suckered in all of the week longs. All right, you got profit taking, and then it tricked the retail people into buying that this was it. We came down, we tested, now it's going to break out. It didn't catch this bar here. It didn't sense what happened. People didn't pick up on what the gain was going to be today. The low of this bar here is 25,951, which took out this overnight low. And so this was a signal. When the market recovered and took the profit, this was a signal to get ready because the carnage is coming. So the AI took profit just enough around right here, around the 26,000 level. That's when the retail people come in and the firms that are not in the know, and they start buying. And then what happens is the AI says, gotcha, right? Notice where they took the market. They took the market right to the last signal where the market topped out in the pre-market. It knew what it wanted. The AI knew what it wanted to do. All right, so it got up in the sell zone here, and before anyone could get a whiff of what happened, it spikes the zone. All right, didn't close near it. It spiked it. See, look at it right here, and then right here, spikes the zone to do the head fake pivot. And then before you know it, because the AI is faster than the human being, because they're using high frequency trading, they come in and they sell right here. The signal goes right here to get short. And that's when the big programs kick in, and then you have a systematic, well, all the AIs are communicating with each other and agreeing to do this together. This is a cooperative event, folks. You don't see any buying, no bids, none. They're all in agreement at this point. There's an agreement, there's a harmony in the market. The AIs are bringing down the market together. The retail guy is out at this point. He's done. He got smoked back up in here because he bought the head fake. And then the AI comes in and they bring the market down to the agreed upon levels. the signal goes out on this bar right here that we're done. I'm going to give you a freebie to let you know how the AI spoke to each other here to prove that they knew it. This here is a continuation bar, but it's a reversal continuation bar. You came out, you took out the low just a little bit to give the retail people the head fake that the next leg down is coming, and then they pop it on you. They pop it here. Profit taking. All right? Taking that money off the table. This sucks in the longs again to come in at this point and push the market, even higher. And then they're getting ready to take it down again. So that's how this works. But I just want you to see the systematic cooperative event of AI working together. And you'll say, no, firms compete with one another. They're not cooperating with each other. And I would say to you, you don't understand the AI. You don't understand the way the algos work. Algos know what other algos are doing based on the price action, and then they jump in and follow suit. That's how it works. All right? How do you think I'm able to know where their stops are, even though their stops are not posted within the price ladder when you're looking at the market depth? You ever ask yourself that question, how do I know these things? Because my algorithms are better than their algorithms. And I can see what you can't see just by looking at a naked chart. I'm just trying to pass on some game to you. That's all I'm trying to do. All right? I'm trying to put you up on game. I'm trying to show you the way this thing works and to tell you that I smell a rat. I smell a rat. Please don't forget this right here. You got mad rampage coming up, folks. Regardless of where this goes, I don't care if price falls down up into here. I don't care if the Dow falls all the way back below 20,000 and we get down here somewhere. So what? Don't forget the mad rampage that you got coming up here, folks. That's going to take you to 28,000, and we should be at 30,000 by the end of the year. Don't believe the hype. This is controlled AI giving the people the pullback that they want, getting ready for the next bull run that will be the biggest in history, because we're already in the midst of it. You got at least about 5 more years of the markets running to the upside. And that could take you to Dow 50,000 before it's all over with. All right, maybe even 100,000. Barring some unforeseen event, this is where we're headed, folks. Just want to let you know that. And you know what? I'll show you a little something to end it like this. To show you how amazing the AI is. The same goes for your Bitcoin. Remember, this is a new contract. You're going to beat it down. All right? The trajectory here is at least 25,000 by the year end on the Bitcoin. 25,000. All right? If all things being equal, this is exactly where the market should go. Now, we don't know where the low is going to be before it gets there, but this is where it is, folks. The Bitcoin is the index, if you will, for all cryptos. It's the leader, all right? Whether you like it, doesn't matter. It just is what it is, all right? So, yeah, we're going to head lower before you head higher, all right? You can't really see it on here because it's a new contract. so it's hard to see it on here. But you're still in a bull market in the Bitcoin. I call it the cash market, if you will. All right. Longer term chart is still bullish on the Bitcoin itself. But on the futures, it's in a bear market, new contract. It is what it is. Okay. All right. Have I covered everything? Oh, let's look at gold and silver. I'd be remiss if I didn't look at the gold and silver, right? All right. Let me take this drawings off. Okay. So gold and silver still holding their own. A little bit dangerously close though to this momentum line. Gold needs to close above 1333.70 this week in order to keep the momentum going. Failure to do so would cause the gold to correct back down to 1306 and possibly even 1281. Yeah, you do have some rampage right here coming up. And then you got a little bit of sideways action, and then you got possible deeper correction, and then you got a little small rampage here in July. So it's tough to say what's going to be what here. But right now it's looking like it's losing a little bit of momentum, folks. Let's take a look at the silver. Silver has been really weak. All right, it's just stuck in the Kumo cloud of death, totally sideways. Momentum is like zero. All right, but this is concerning because you lost it here 2 weeks in a row. Silver needs to close above $16.92 in order to have some hope of possibly heading higher within the cloud. If not, we've still got several more weeks of this. You got a vortex to be concerned with coming up in April. Then you got another one in the beginning of May. All right, May has like two back to back within like 2 to 3 weeks of each other. All right, so that's where we are, folks. These are what these markets are looking like. Here's your strong bond. Strong bond is still in a well-defined bear market on the weekly chart. There's nothing bullish on the chart. It can be, though. If bonds close above 148.04, then it can put it into the downtrend and start a correction off the lows. That will take us back up toward the 150 range and the 153. Topside resistance will put us right at the bottom of the Kumo cloud, which is a strong resistance. Regardless of what happens, you do have a vortex coming up April 30th, the week of April 30th, and it'll be a do or die week for the bonds, especially if they're still trading below the cloud. We'll need to close above the cloud there in order to put an end to the downtrend, and then you get another chance here before this is a more powerful vortex here. I'll show you this here. If markets close below it, would actually send prices much lower. This is a strong vortex here. All right, this is a good one here. So I'm thinking that that's what it's going to look like. So here, the week of April the 30th, market should be able to catch the vortex and get above the cloud. Got a bearish vortex here on the week of July 23rd. They could suck the prices below the Kumo cloud lower. All right, so here are the two chances, or the two vortexes to be aware of on the strong bond. All right, let's look at the miners now, the gold miners, GDXJ. GDXJ is looking like the other chart I just had a moment ago. Needs to close about 33.42 to put it into this downtrend. And then it's going to have to work its way above 33.91, which is topside resistance. Push it right below the Kumo cloud. That's going to be a heavy air pocket because you got mad elongation here of consolidation within this cloud. This is a really stretched out cloud. and it just keeps you sideways up until August. So really saying that all things being equal, unless something happens, the miners are going to be stuck in sideways action for the greater part of the year. All right. So barring some unforeseen event, that's what we look like. Let's look at XIV. The XIV has really corrected. It's been leading the way down. And notice how it's behaving at the trend line support. It's behaving just like it should at trend line support. All right, something weird. Did XIV split? I think the stock split in XIV because we closed at $99, and here in the pre-market, it's showing it at $10. And yeah, showing it hit a low of $10. So the stock had to have split. Yeah, because it went from $99 to $30. Yeah, it had to have split. I'm believing that the stock split in XIV. So yeah, wow. Don't know why they did that. It really wasn't a need to do that. It's not like it was $1,000. It only topped out at 146.44. So I don't know what that's about. Let's see. Let's take a look at TVIX. Yeah, now TVIX is at $19.59. Yeah, all these splits and reverse splits and splits and splits. I tell you. All right. This further deepens what I was showing you about controlled AI. TVIX has been a dead dog for the longest time, even during the Trump election and when we had the Brexit and all that stuff. Remember, I showed you TVIX only moved $3 the whole time, even though uh, the pound it was down like 20,000 points. And remember, it was crazy carnage, and this thing barely moved. Now all of a sudden, it's moving. It's moving like a real stock is supposed to move. Yeah, antennas go up on this. Antennas are really going up on this one. Even the UVXY would be not all that moved when events came. It would barely move. It moved better than the TVIX, but not by much, just barely. Now look at it, it's coming to life. It's acting like a real stock all of a sudden. Look at this. Look at this daily bar. It opened at $15.19 and rallied to $23.59. That is some move. That's the most this thing has moved in years. So all of a sudden, your inverse ETFs, which were really just dead dogs, are all of a sudden waking up. Yeah, so I'm almost certain though that XIV is definitely a split. I'll have to look into that and see what's what, but I'm almost certain that it is definitely a split because that type of price destruction would only be valid if the Dow was down like maybe 5,000 points or something. Then I could see this possibly flash crashing down to $10. So definitely a split here, which is interesting. They would do this now. Oh well, it is what it is. Okay, I think I covered everything that I need to cover. I'll pull up the dollar real quick. People like to see what the dollar's looking like. All right, here's your dollar. All right, it's trying to bounce off of its lows of 88.43. All right, market really needs to close above 90.12 this week in order to make a serious run toward the 92 and the 94 up topside resistance levels, which is still below the Kumo cloud. With air pocket, it could push the price back down again and make it get sold. So we'll see. I think, like I said in the webinar yesterday, I think Trump needs to have the dollar between 90 and 91 for his current economic plan to work. Prices below 90 just don't bode well for his economic plan. So for import-export reasons, they need to keep it between 90 and 91. Can't have it too high, and you can't have it too low. So 90, 91 is a good happy medium for the Trump plan to work. All right, I think I've been a little long-winded on this one. I'll try to cover as much as I could. So with that being said, pulsewavetrading.com, come learn how to trade these markets. Come learn how to read the algorithmic tea leaves. Learn what the central banks don't want you to know. Pulsewavetrading.com. With your subscription of the weekly Pulsewave price triggers, you get a 7-day free trial, and you get the study course for free, along with tons of other freebies and essentials that you will not find anywhere else. Pulsewavetrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And that simply means do not turn winning trades into losing trades. Peace.